And good morning, good afternoon, good evening to all, depending on where you are in this world. My name is Michael Filighera. I am with TradersHelpingTraders.com and LogicalSignals.com. A little bit of history. I have been trading. I started as an options market maker in 1979 on the Pacific Coast Exchange here in San Francisco. I've also traded options on the exchange, on the London Traded Options Market, the European Options Exchange in Amsterdam, and I got my introduction into all electronic trading when I began to trade on the German DTB. Came back to the United States in 1997, returned to the Pacific Exchange. And then when things started to get all electronic and the orders were not necessarily being routed to our trading floor, there was no necessity for a crowd anymore. And so many people began to leave, and including myself. So I set up my office in my home and I traded until about 2013, 2014, when I decided that I no longer really wanted to play the options volatility game and I'd rather play day trading. And so I switched over, became a day trader in 2013. In 2014, I started and joined David on, now I can't even remember, Crowd Forecast News. So, and I've been doing those along with David, plus all of many of the other programs that David puts together. And so right now I continue to trade the futures. And it was really interesting to watch Dave Landry talk about the Qs because my primary futures market that I trade is the NASDAQ. I also supply daily updates on an Elliott Wave basis. I use the daily update on YouTube. So my channel's there, and it's Traders Helping Traders, and then my name. And then I also provide a weekly technical update where I include both the cash market in the S&P 500 and in the NASDAQ along with those futures. And I also provide coaching for those that would have an interest, and I'll go over that all again at the end. So this show is about you guys. It's looking for, and so I've got the first one coming up, and that is shop. So let's go over and take a look at shop. So, which is Shopify. I'm going to take it off that 15-minute chart. Now, normally, when we're looking at something on an LA basis, you try to look at the largest picture that you can get so that you can kind of get a little history, where it's come from, where it's going to. So I'm going to go to at least the 3-year weekly cycle, and I might go out one more, to be honest with you, because I think it is actually following the broader market. Right, came up, made that beautiful one. And so, interestingly enough, I'm going to say that Shopify seems to be following a previous count that I had that I called my preferred count, and not necessarily what is now playing out in the S&P 500 or in the NASDAQ. And that is that was the all-time high right there for Shopify. And again, I'm not sure if they did any splits or anything, but let's just say that's the all-time high. We get the first leg down of a correction, and this does appear that it likely was 5 waves. So if I kind of come back down now and go to my 3-year, I think that's still that high. Yeah, I need one more. But let's say that we're still coming down, and it looks like it did come down in 5, which suggests that this is going to be a 3, and it kind of looks like it is. May not be done, may be done. So again, we reached a high in Spotify in February of this year, and now have been selling off pretty hard, and in fact, got hit hard, I'm going to say, in the last earnings report, which was at the beginning of May. And now the market's recovering a little bit off of that. Now, if I were to put a small count on it, I would think that we still have 1, 2, 3, 4, 5. That's like a 1. This might be a 2. And then we're still got a lot more to go, and eventually going to end up back below this before we see a stronger rally. Now, I believe that this market will again find support here, 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 and then here. Now, if we were just running, just again, I got to take it out one more because I got to catch that high up at the top. Let's go look at a 5-year chart. There we go. So if I come in here, and I'm just going to add some fib numbers to this, which would suggest, right? So what now I'm looking at is that decline. This is the intervening rally. And then we're coming into the next decline. And you can see where this is coming in. Now, I'll fill in some gaps here because we have so many different 3, 2, 5, 7, 8, 6 is not good. And I'll leave the others there. And let's put them all the same color to make life easier to identify them. And then we'll go. And let me just do that one. And the other ones I think are set up. So you can see this is going to be initial support now. Let's take it back down so we can put it in a little bit different perspective. So you can see we have initial support. So in essence, if this is really the first down leg and this is the intervening counter trend rally, then we'd be looking for another 5 waves down. And that's love it when my machine decides to counter for me. So here we have just off of a 4-hour chart, and this actually needs to go up just a little bit more. Let's take it up to that high. There you go. We're looking at one, yeah, this is like an A, B, and this might be the C wave. So it is presenting us with a little bit difficult type of a pattern. So I'm uncertain, but I would think that we still need some additional downside. And so the first line of defense or support really comes in quite a bit lower. But just coming out of this particular move, we can, let me go back down. I'm just going to keep shrinking it down. So here again, we have that high up there, which was that 68, 69, 68 level. And then you can see it's kind of A, B, C level, which suggests we might go back up before the stock would be due to kind of pull it all in and go. Now, I'm not understanding that Shopify, with their business, how heavily they're affected by a move in interest rates, how heavily they're affected by any of the retail sales data. Would also, you'd have to put that in there. But I think just on the straight picture, I think if the whole market begins to correct, which I'm kind of looking for, not anything super, super big, but a correction, it's going to look like this. So whether Spotify is actually above, already going through that process, don't know. But I would think that we have continued downside. Now coming in, at least on the hourly chart, you can see here's the 200 period moving average. So the market's already broken through, at least on the hourly chart. Come on, computer. You can see that here's the 200, here's the 50. This is the 13 period, and this is the 20 period. Both have now broken below that 50-day moving average or 50 period moving average. And if we continue, if this downside does continue, I'd be looking for these moving averages to come down and start cutting across the 200, which would present a more negative outlook for, at least on an hourly basis, for this stock. I could take it up and we could take a look at the daily chart and just see where it sits. It's still above. So on the daily chart, it's a little bit different. We got the 50 coming down below the 200, and that happened on this gap. So that turned it negative. And then these just roared down because of the strength of this decline. But now they're turning back. So what we look for on a downside move or continuation, you want your moving averages to be lined up in that direction. So in other words, the 200 would be on top, then the 50, then the 20, then the 13. And right now, this rally got the 20 and the 13 to turn and move higher. And the 13's now crossed the 20, but you can see how they're starting to go flat because of the little bit of strength in the downside action. So What I will add, and again, not knowing what the option situation is in Spotify, one thing that just to kind of bring to people's attention, if you heard me yesterday, then you likely heard me also talk about that the expiration that's coming on Friday, June the 21st, is the largest that in my history that I've actually been following, uh, the largest I've ever seen. And what I mean by that is we just take a look at the notional value of how many options will expire and come off. And I'm now just talking the SPX. I'm only talking about the S&P 500. If we started adding in the NASDAQ, if we started adding in all of the options that are going to be coming off within the treasury markets, and et cetera, there's a lot that expires this Friday. But just for the SPX alone, it's over $1 trillion. That's, in my view, a tremendous amount of money that gets freed up. So in other words, the options expired, those that either you're going to get assigned or you put in your exercise. So either if you're trading in the indexes, that all settles in cash. So this amount is going to settle, change hands. That is huge. So I'm kind of thinking that what could go along with a short-term top in the markets. And that doesn't play out here as well as you can see it in, say, for the S&P or the NASDAQ. So again, just getting back to Spotify, it's getting close. If it comes down, this is the daily, so you'd have to kind of hang out and wait. It's going flat just right now, but if it comes down and it breaks below both these, then again, what Spotify is going to be showing us on a daily basis is that the market is heading lower. So that would, because it would put the moving averages back in alignment. And then that's what I would consider that's going to go down. Now we're looking here at relative strength on the daily, and it's basically collapsed real quick. Now that high was it actually was a higher high than there, barely, but it was. So that doesn't present a more negative tone. What did is it reaching this high against a declining relative strength. So the market's been giving its hints that it's not finding the strength to really start pushing back above 100. And again, it's still not. It got up, and then now we're just seeing it kind of just really turn tail and head south. So that would be what I think about Shopify. Okay, well, now we want to take a look at Salesforce, one of my local companies. Let's get that in. Okay. Okay. Salesforce. All right. So again, yeah, Salesforce disappointed, came back and still going down. So as much as I love Salesforce, they are not immune to the forces that be. So let me just go to this one. So that was an all-time high back in February of this year. And again, that was on a solid earnings report. So this makes sense. Let me go one more just to double check here. That was, about equal. So it went up and equaled. So, but if anything, right, if we're going to consider 311.75 and this was 318, so it made a slight new high there. But it's almost, if you look at this, it kind of looks like it's three. It looks like it's an ABC. On an Elliott, that's kind of a corrective. So if this was an A wave down and this was a B, then it's basically coming in at what we would call a flat. So I'd be expecting this to likely come back down to here. Now, this is a monthly chart. So let's take it back down and at least look at a daily. So if we're looking like that would be the B one. See, that's very kind of nasty. Then we break into an impulse type move, right? Because it's down and it's 5 waves. and then another correction, 1, 2, 3 big gap. That's a 4, and we're likely going to come down and fill in. So it attempted to go up and fill the gap, failed. We have all of our moving averages still pointing very strongly lower. We got the 50 getting ready to break. We got the 200 turning lower now, all based on, that huge gap that they suffered on their earnings. And it really wasn't the earnings, it was the forward guidance. So, but the market decided to kind of bounce off of that, which was okay. But now seems like we got another 5 waves building to the downside. Now, one thing that you can do, and this is kind of just an interesting combo of how I use Fibonacci sequences. See, what we would look at is this compared to that. So the first one you would go for is equality, which is always going to come in at 100%. Well, you can see that initially it gapped, of course, but then it gapped back above it. But now that it's going back and breaking, this would be our next level, would be 205. And that's where this leg would be 1.618 times that leg. Now, to be honest with you, that may just be a stopping point, and then it rallies again and then comes back down. So I mean, this is just all technical analysis also, by the way. So I'm not looking at anything fundamentally that could build a case for stronger market in Salesforce moving forward, that it looks good because they have earnings potential, et cetera. If I had to look at something fundamentally, I'm going to look at it more on our the U.S. economy or the global economies, or what do I feel that's going to be happening to interest rates and how that's affecting our market. So right now, as I just said, we have a very, very, very large expiration coming on Friday. That's the monthly. Excuse me. Yeah, that's just our June monthly. Then the week after is the quarterly. So, and which is minuscule when in comparison. So I'm almost in feeling that the June expiration on the 21st is going to really come out as that's going to be the quarterly. And basically because the amount that's built up for the June 21st expiration versus the June 28th. And the data that I get in terms of how things are building up is from Spot Gamma. And they're impressive. They're impressive because it puts a lot of things into perspective in terms of options flow. So, and because there's been a massive flow into call options and minuscule, again, inputs. So when we're looking at this, it just changes how you want to focus on it. So what happens at the expiration is all of that gamma or the delta or just everything gets released. And it gets released due to the fact that the options are expiring. So they settle, and that everything that was held there has been released. And so when that amount of money is being released, the outcome, I think, could be very surprising to people. So that's where I get that data and then how I apply it to here. So right now, for Salesforce, I think they have additional downside, at least to there, if not down to here. So I can continue, and you can see my next one down. So the fib numbers are, 618, equality, 1.618, 2.618. So that's how I do it in terms of what the market is presenting to me and what it's doing. If it's putting in a stronger leg, so either I could call this A, B, and this is a C, or I can call this 1, 2, and this is a 3. And if it's a 3, it's dropping in the 3 of 3. And that could come all the way down past here and get down into here, move up in a 4, and then come down again. So, and in terms of its effect in the market, this is a member of the Dow. This is also in the S&P. It is not in the NASDAQ. So I'm right now looking for, and let me just let's go over and take a look at the S&P. I'm going to do it via the futures market, since that's the one everybody's familiar with. See what and I'm just going to pull it out one step. I'm going to go to a 3-year weekly chart. And what I've got going on is like on a larger scale, what the market is putting in is a primary fifth wave. So within primary fifth wave are going to be 5 waves of intermediate degree, of which we've only completed 1 and 2. So we're then intermediate wave 3. Now, what's that going to consist of? 5 waves of minor degree, of which we've only finished 1 and 2. And now we're finishing. We're just getting to that finishing point for a minor third wave. So if I bring this down, and I can bring it down to my daily chart, there we have it. And within this finishing wave pattern, within minor wave 3, we have 5 waves of minute degree. That because of the contract change, so I just got to pull that higher. So what we have is minute 1, 2, 3, and 4. Now remember what I just said. Another 5 waves of minute degree before I can put that tag of minor wave 3 being complete. So we're in this minute wave 5, and it started at the April expiration low. So what's going to be inside of this minute fifth wave, right? The building blocks, and I just keep taking it down a degree. So we have the minuet degree, so but 5 waves, of which I can count 1, 2, 3, and 4, and we're within this minuet wave 5. Now, the important thing to understand here is it is extending. This was beautifully extended, but now we're inside this fifth, and the third wave extended as we would look for. Then we have 4, and 5 is extending not once, twice. So I'm going to bring that down. We're going to take a look at it on this chart. So here is that 4 right there, and now I'm looking for 5. And these are sub level, right? And they're extending, and this fifth wave is extending. So it becomes very interesting. I might have to move this level and put it over here, but I don't think I need to. In any case, what I'm looking for to finish this is a move, not necessarily to 55.63. I'm leaving it there because it should provide resistance, but it's, excuse me, it's not going to complete the move. I'm looking for a move up towards, we got 55.70 to 75, and I actually would consider from 65 to 75. And what we have inside of this, the blue, are this internal move. So its completion point is 55.72, 55.90 for this section of it. This label is for this section of it. So we got 2 on the internals, one that measures from here and the other going inside. So I stick with these, and that's 55.72 to 55.90. We're close. Now, once that's complete, it's going to put in the sub minuet wave 5, which will complete that. Then the minuet wave 5, and let me just back this out with you. And let me go out this way, and let's go here. Okay, so we're finishing the sub minuet wave 5, the minuet wave 5, and the minute wave 5. And then what gets put on top of that is the minor third wave. Then I'm looking for a correction. Now, if I'm thinking this is how high it's going to get, Elliott taught us that a fourth wave, once in progress, will find its terminus, its support or endpoint within the price territory of the fourth wave of 1 lesser degree. Well, that's right here. That's why I put it in orange, because I label my minor degree in this color. So I'm looking for the completion of a minor 3, put in a minor 4. Then I still have a minor 5 rally to do. And then that completes, let me go back out. Just so, because this is important to know that I'm not looking for the world to fall apart here. It needs to pull back, and it's going to be a decent pullback, and it's going to be very tradable. But end of the world, no. So we're still in that 5. So we're coming off. We have minor 3. We come down, put in a minor 4. We go back up in a minor 5. And I don't know levels just yet, but really we're looking up here. So 6,000 is not out of the realm of reality for the S&P to reach, maybe by year end. A lot of other factors come into the picture, but purely technical, we're looking up here and see this next one? That's the intermediate degree, 6241. So we still have that potential. So once we're done with minor four, we go up in a minor fifth, and then we complete the intermediate third wave. So once again, follow me, right? Minor three, where's it going to find its support? Within the price territory of the minute fourth wave. Once that's done, we go back up in a minor fifth and complete intermediate three. Where's it going to find its support? In the price territory of the minor fourth, which we're already kind of suggesting is going to come down into here. So we're going to go up and come down twice, basically to the same area, and then go up again in an intermediate fifth wave. And here you have it. And so, yes, there's still, in my opinion, enough upside to go. Now, how is that going to relate when we're looking at stocks like Salesforce? One would think that it should follow through and have some boosting power. But we would have thought maybe it should have, because look at what's happening in the market now. And Salesforce reported and it got smacked. So that's kind of what I mean. It's like when you're trying to place this into its index, what will come into play is what it actually said in the earnings report. How did it all match out? They didn't like it. So I feel that that's kind of also happening in a lot of other stocks. They're overbought. They've been pushed too hard. So it's just a correction. Not anything negative, to be honest with you. It's a correction because it's extremely overbought. So, okay. Oh, I'm waiting for that one. I knew Apple would come up here at some point. So let's go take a look. Apple is amazing. And I got to tell you, look at that parabolic move. Incredible. Now, this is interesting. Apple has their Worldwide Development Conference. And that was, what, a week or two ago? Because it was actually right here. So that was the week of last week. So again, they have that. And initially, they sold off Apple. I think it was down $3 after they completed that conference. It wasn't until the next day that everybody thought, that was not the good move. Because what the Apple was revealing and talking about is artificial intelligence and incorporating it into its products, into the iPhone, into the iPad, into the iMac, into a lot of different products, which of course then really gives Apple that boost. So that's what we saw. Now, it's gone above resistance that I'm thinking should have contained a third wave. If there's a possibility that the third wave, I'm talking about this one, right? I'm on a weekly chart. And if it did, then I got to, which I don't think so. Because I had to say 1, 2, 3, little 4, we come back above and we get above, folks, 220. Now, if anything, I might be able to put another little fix here, and it would look like, let me just kind of, let me bring this down. So I think Apple still has upside. But it also will fall prey because it is in the Dow, in the S&P, in the NASDAQ. Don't think it might be in one of the Russells, but I don't think it's in the Russell 2000. So here we have it. And when the whole market as a whole is going to be sold, this is going to come with it. And I think a lot of it is, when we're looking at the stocks that have really taken the boost from its involvement or its joining artificial intelligence and how this company is going to use it or that company's the chip maker. It is a serious sector that we cannot ignore. But like everything, it gets pushed too fast, too hard, and it's just a pullback. It's not saying that artificial intelligence is gone. It's just saying that the necessity of massive amounts of capital to be placed within the sector via all those different companies the initial push and then the secondary push, well, this is where we sit. So pulling it back is going to produce a lot of buying opportunities. So within Apple, I think that, let me just take a look here. I'm going to move this one. 100, 3, 4. Well, it's kind of weird because they're coming up pretty hard today. So I'm not totally sure, but let's change this and put it all the way up here. Now, if this doesn't come down and break this, then I'm going to look for Apple to turn around and go again. Now, what does that look like? There you have it. 229. One more high. And that's just going to, if this completed, if that completed 3, and this completes the little 4, 1, 2, we go up. Now, if it breaks this, then there's the possibility that this 3, and this is really just still in progress. And if that's the case, then we might come down to, I wouldn't think we're going to come this low. We might come down towards here, 205, which is still $10, right? But I think that Apple's in pretty good shape. First of all, you know that they have cash reserves beyond. So Apple would be on my favorite list. I use Apple products, and so it's just like it would be on one of my favorite lists. So I kind of think, yep, it needs to pull back and see what happened. Secondary high. Here was that high. RSI, that's a negative RSI. So this should not be, wow, why is that happening? The RSI kind of led us up to it. And I think what it could be is just an A, B, and a C. And that's just to finish this little fourth wave. And then we rally again. And that, my friends, could happen Thursday and Friday. It could happen Thursday and Friday. Don't forget, big expiration coming up. All right, let's go take a look at ELF. ELF Beauty. Okay, I don't know anything about it, but we're going to go take a look at least a 3-year chart. Wow, this thing's been on a roar, and they're continuing to roar. Now, wow, must be a thin stock, or not that many shares are available. Yeah, I think this is, here's the low, and that low was in 2019. So if we got 1 and then a 2, it didn't make a new low, so we can call it a 2. And then 1, 2, 1, 2, 3, 4, 5, 3, 4. It's got one more little peak to do. I gotta see, I hate my computer when it says, no, I need to adjust it. So 3, 4, 5, 4. It has, well, this is another strange one. It's a 3, right? So you can see the nature of it. Up, down, up. So if it continues, great. It's going to go up and put in a new high before then it participates in its own larger correction. And that, in my estimation, we're looking like what it's going to be correcting is this third wave, wherever it ends up. And so you're going to run fibs, right? Retracements from that low. Right now, I'm going to run it to the current high. And if it gets up, it equals that high, or it just goes above it, then you just move that. But this is what I'd be looking for. Normal in a fourth wave, it's going to be 0.382, and that's 140. So it comes all the way back to 140. And that's not, in my opinion, it's not unhealthy. You know, if somebody was buying it up here because they're expecting it to break out and go, and then suddenly you get hit with an $80 turnaround, yeah, it's not healthy for your P&L. But for the stock and just the move, it's just a nice little pullback. Because it's gone up with such strength, it's going to seem like the world is coming apart. But again, not knowing what they do, obviously something, making something. But right now, I don't know. I would think we go up a little bit more, put a maybe new high, and then we pull back. That would be my take there. Okay, ARC. This one's a toughie. This is the monthly. 1, 2, 3, 4, 5. A, B, C. ARC, in my opinion, goes down. And I don't think it's going to be pretty. This is, again, is the monthly, so the best I can do is take it off of that low. And what we're looking at. So from here, if I'm looking for the next leg, I'm going to go down, go here, and we come up to here. You're looking, okay, let's do it differently. Now that I got that in there, yeah, this is not pretty. That's these are strong signals. And right now, I can't even do it because you're saying, even if I go to minimal, the stock's negative, and we know the stock's not going to go negative. So it's very difficult. It's very difficult to kind of put where the stock is going to go. But I would think that, yeah, we put in another low below there, below 29. Because this is just not a strength there, because of how it kind of came in. That just doesn't look good. And I know that ARC is, got some good positions, got some bad positions. And I think it's still a major holder of Tesla. So, usually you can go over and you can look at Tesla, which is kind of garnered a lot of hope, right? And I kind of went up and went down, and I put in some markers. There was one day I was doing something. And what we're looking at is the possibility. This is the daily chart. Again, we gapped, we went up, we came back down, we went up. It should continue. But Tesla's going to get caught up in its expiration. Now, let me just tell you what I also do, because I'm going to talk Tesla because of ARC. Go over and take a look at Tesla. These are options that are going to be expiring on Friday. And here we're going to look at open interest. Right now we're trading about 185. Come all the way down to 185, 79,000 today, 59,000 in open interest. But look at how this open interest is built. This is stuff that's expiring on Friday. So you can see that the push-pull is going to start. Is it going to drop to 180? Well, we already know that Tesla can lose $5, $10, $15 in a day. So then you've got, what types of positions are on the 180, the 200. Yeah, look at that. So you're buying this call, you're buying that put, and it's called a strangle, but you're just kind of wrapping it around. Actually, come out here, 185. You got a $15 strangle on there for if it breaks or if it breaks. Hopefully you're covered and you'll make money, or you're putting spreads on in between. So the options flow is telling you they're kind of either going to push this thing like crazy Thursday or Friday, or they're done and they're just going to take all these longs out of the market. Right? So one of the things that larger dealers tend to do is they monetize a position. You say, well, what does that mean? Well, let's just say that they have a put that they want to monetize. And how they want to monetize it, they want to get out of it. They want to get out of the position. So if you have a put and you're long that put to that point, and you're not really thinking that you're going to get below 180, but they might just drive the stock lower, drive the index lower that it participates in. And when it gets to the point that they can monetize and they get out of it, well, then suddenly it's released and it turns and goes back in the other direction. Same thing in the call. And maybe some bigger player is long that 200 call. Or they're short the 200 call. They drive the stock lower so they can monetize the position, get out of the position, release it so that come Friday, if it was gonna, if Friday we explode to the upside, then those 200 calls will truly pick up. And volatility is going to take it up first of all. But then again, as it gets closer to 200, they're not going to be able to monetize it if you short the call already. And I'm not sure where these, any of these positions are being put on. So this is just, a discussion. So it's, yeah, I saw that attend somebody. And let's just see. Kathy, I'm unable to like say, that you can say anything other than if you have a stock you want me to look at, put it in the chat. So let me go back to the chat and we'll see. So back to ARK. I can take a look at ARK and think like I don't have a lot of confidence in that as a fund, and because of their big earnings. And Kathy Woods has talked about that they are, they're looking at a long-term picture for Tesla. And I think she even has had, 500 she's put out there. Now, we'll see. We'll see. There's so much internally happening that it's going to get interesting if nothing else. So I think Tesla might be reaching a point where, again, a lot will find out on Friday. How Tesla comes out of that expiration is going to, I think, determine as to where we are in this larger picture, and then what we can look for. This continues to say that could be all done. And then we got this and we got this, and it could point to just go Tesla, just go. And then here's your markers. The 210 area, 253, 260 area. Right? Those are pretty high. And that's going from that low up and then down. And that's where that one comes in. You can see there are higher levels back above 300. Now, this is technical. This is not anything fundamental. So many times we see moves in a stock and the world thinks, oh, everybody's bullish on the stock. May not be, folks. May not be. Again, let's go back to options flow. If retail is coming in and they're buying calls, and maybe they're selling puts because they want to be long delta for a move up, I, as a dealer, I'm selling that to them. And if they're selling the put, I am buying the put and I'm selling the calls. Well, that produces a very negative delta position for that dealer. So what is their hedge? To buy the underlying, in this case, buy Tesla. And when you buy Tesla, it's a self-fulfilling prophecy. Now, take into consideration what I said, that there's been a massive move of capital into calls. That's across the board, into calls. And we just looked at Tesla. So it all makes sense. What pushes the stock higher? If that continues, so in other words, it's like Friday comes and goes, everything settles, and then we come back in on Monday, and maybe there are a lot of people that's going to be long Tesla because they were long the calls got exercised, they received the stock at whatever their strike price was, and then we come into Monday and they decide it's time to take the market lower. Well, what's now going to really create a strong downslide? All of this long stock that just got settled, and now I don't want it because Tesla opens down $5 on Monday morning. Again, no idea. So when we're really looking at a stock and you're trying to determine, or anything, and you're trying to determine, is it a buy or is it a sell? And you're looking at the fundamentals of the company thinking, well, it's a strong buy because of X, Y, and Z. The market might have a totally different idea. So options flow really kind of is what I look at here. So, Kathy, if you really, whatever your question, if you can kind of put it in the chat here, I will be able to look at that for you. At many, what else we got, folks? Let's see what else anybody's got an interest in here. And we'll see. Let's see what else I have an interest in. Here's another one that is very, very interesting. It's not an individual stock, but it is the semiconductor. And of course, we know. Now, if you got to break down this semiconductor, this ETF, and you need to realize that within this ETF, NVIDIA controls 22% of the move. 22% every day. And the fact that NVIDIA is such a strong stock, that helps it. In fact, NVIDIA is getting it to be up 5. So these are post-split, folks. These are new all-time highs for NVIDIA. So it's contributing. Look at that. Semiconductor, NVIDIA is up 5. I think supermicrocomputer is up, let me take a look, 42, right? And then let's just take a look. Let's just take a look. Let me put this to come on. I'm going to close that for just a moment. So in SMH, look at this. This thing is also going parabolic. Now, in all honesty, you got to be careful about trying to buy into a parabolic move. Unless you're like day trading. That's a whole different picture. And again, you can use options flows to choose direction and to create intraday trades. Interesting concept, but real. All right, so again, looking at the SMH, let me bring it down to my 4-hour chart. Again, that's the area. And I'm looking for this pullback too. So that 5, nope, it's not ready yet. I got to keep moving it. I just took it off. That worked. So we're looking for the 5. All right, we got 1, 2, 3, 4, and then 1, 2, 3, 4, and now we're into that 5. Boy, I think we're there. I think we're very close. That's the 4-hour chart. Bring it down and look at the hourly chart. So again, there's the 4. 1, 2, 1, 2, 3, 4. Well, maybe only 3. Maybe only this internal third. Come down one more time and go back up. What do we got above all this? 286, 288. And again, this is on the minuet degree, and this is on the sub-minuet degree. In fact, the sub-minuet degree, you'd be looking for this thing to go up again, $10, $10 more. And could it do it? Yeah, it can. It can. And how? Well, let's look at NVIDIA. Now, here we have NVIDIA. New all-time high. Post-split, new all-time high. Pre-split, you're looking at 1,360. Wow, right? For a stock that just a short while ago, and in mid to the bottom of May, was trading at 900, and this is all pre-split, was trading at 920. Right? And so here we have this guy. Wow. That's a $400 move. Pre-split. And they're just piling in. And again, it's pretty incredible. Now, what do we got going on in NVIDIA in terms of options flows? Now, this is, again, the volatility is staying pretty tame. It's high, but it's staying pretty tame to what I've seen in NVIDIA. But now let's come down. Look at that. The 120. Wow, we're way above that. So you see, look at how huge the open interest is. 149 contracts. So that means there's 149,000 contracts that likely, or for sure, will be exercised. So it's 149,000 times 100. That's how much stock will settle at that price. Well, a lot of people getting out because they don't want to pay the exercise cost, and they're probably making a bundle, on what they did. Now let's come down. Look at this: 132, 100,000, 136,000. Again, 113, 243, then 135, and that's right where we are. All right. So we got Wednesday's a holiday, so we really got 2.5 days of life left in these options. And the 135s, they're starting to pull it in a little bit. But what is, you can always look at, if you have it on your system, you're looking at what's intrinsic, right? And what's extrinsic. So when you're looking at these calls, they're trading at 90. So it's at 90 cents is really what the intrinsic value of this call is. So, but they're trading at 258. Well, the balance is the opposite. That's the premium. That's the premium that people are paying. So as a dealer, if I'm selling those calls, what am I going to do? I want that premium. I'm going to go buy the stock. So it becomes it just becomes the way it is, so to speak. So again, when we're looking at the options flows and as things get ready for the expiration, well, there's a big part. Somebody came in and they're taking profit, hopefully. I wouldn't think that they're shorting it here, but they might be. Because right here, if you're going to look at, again, let's take a look at that intrinsic versus extrinsic value of the 120s. No, a very small amount of premium in that call. So you're not going to sell it to capture premium. You're selling it because you're making money and you don't want to pay the exercise cost of what it would be. Or you like that and you're just going to get out. So that's NVIDIA. Look at the options. Look at how these options trade. The 140, 161,000. I would think that one is being sold because it's pure premium. But could NVIDIA go up another $4 between now and Friday? Yeah, it could. Here's the other one that I want to show you. Broadcom today reached 1851. They reported their earnings. I'm going to just go over and take a look at it. They reported their earnings last week. Right there. So they reported their earnings. Let's get rid of that. They reported their earnings right here on the 12th of June or the 11th of June. And the stock is after the close, the stock went up $184. Then it went up, it came back down, and that was nothing more than a correction. And it has been gap all the way up. Finally, the market is starting to come off a little bit. And monetizing positions, possibly. Monetizing position on the way up, possibly. I don't know. But it just gets to a point. Look at, you've been getting the warning signs since this high. Actually, since this high. All right. So the warning signs started on June the 12th on a relative strength basis. Higher high, lower high. Higher high, lower high. Higher high, lower high. And now, sail south. So the strength isn't to the buy side, it's now to the sell side. Just a pullback, or is it really telling us time to really pull Broadcom in because this is all fluff? There's where I think we're going to find support. Now, that's way down there. Do I actually think on a monthly basis that the stocks would come in there? There should be support there, and there should be support there. But if it's going to pull back to here, $700 move. Does it say that Broadcom is not a good company? No, I don't believe so. Obviously, they keep announcing, their earnings are good. The forward guidance is good, but artificial intelligence. So you got to take the fluff out of artificial intelligence. And I'm actually going to finish it up here because I realized, well, I'll do one more. Let's do super microcomputer. Look at how this one's going. Going parabolic again. And why? Well, I'll tell you. If I just move it out, bingo. Look at volatility. This one I've seen much higher, but that's a pretty high volatility. Stock is up $43. Why? Well, we just take a look at where we have our large open interest. Well, 945. Ooh, look at that. Are they really seriously thinking they can get this back to 1,000? Can it go up $70? Well, it's going up 43 today. Could it go up another? Yeah. And look at that. Now, are they selling that or buying that? I don't know. But here I think we got the spread. Right? The 950 call against the 200 or against the 1,000. That's a good spread. And maybe they did it 14,000 times. These are the big players. So again, it's all good stuff. And I am going to say thank you. Thank you for hanging out with me. And you're welcome. You're very welcome. So again, my name is Michael Filighera. And if you have any questions or if you want more information, again, I do coaching and I have a trade room. So if you have any interest, you're welcome. And please email me. And David's going to put it in the chat, I'm sure. Michael at mjf1partners.com. I welcome it. I'll answer questions. If you have questions about, hey, what is your trade room? What is your YouTube channel and what are you doing and how's your coaching? Please just go ahead and ask. We meet every day in our trade room. And I have a colleague who happens to be located in Germany, who is incredible with analysis in the NASDAQ. Thank you very much. His name is Sasha. And we love trading together. So, and it's not always the easiest thing to do because we're day traders in the NASDAQ. And lately, the NASDAQ has been getting real choppy. And so if you've ever traded the NASDAQ, it is $5 per tick. And then the NASDAQ doesn't move in ticks, it moves in dollars. So you could get into something and suddenly you're down $200 or $300 or $400 real fast. So it's been a challenge. David, I want to thank you very much.